Boom. Good morning, everybody. Happy Thursday. This is the morning show on Stock Market TV. What are we talking about today? Well, maybe we're talking about why yesterday was interesting, right? Yesterday was we were so close to an all-time high in the S&Ps, and then we got rejected. That's okay. It's only one day. That's what JC would say. It's only one day. But interesting price action nonetheless. Very kind of a weird, there are different format for the show today. We're going to have a guest on, John Salama, but he's going to be on at 9:30 along with options, Sean McLaughlin. So it'll be the three of us for the next hour, and then John and Sean from 9:30 to 9:45, 9:50, give or take, and that'll be the show for the day. So good morning, chat. Good morning, Chris, T-Core, Mary, Caesar, Nick, Josh, Ryan, Sam, Mark. Good morning, everyone. Hope you all had a great night. Let's go.
All right. You guys underestimated me, Strazza. How many zlotys did I get in? Huh? Come on.
2 zlotys, huh?
2 zlotys in the show. Maybe even a third. I don't know. I blacked out. Let me tell you something. Charles Payne, after that segment, was very excited that I brought up the zloty. He made it perfectly clear that no one has ever brought up the Polish zloty on his show, ever. First time.
Did you tell him after why you brought it up?
I brought it up because it's been to tell all along, right? No, I didn't tell him we made a game out of it, but
all right, good job. So we're gonna do that every time now when JC does television. We're gonna give him a fun word to see if he could get it in the mix. I think that's a blast.
I think the reason that Charles maybe wasn't like he was impressed, but he probably wasn't surprised, right? Is because this is what you do, game or no game, JC, right? This is the kind of your thing. You're always like talking, not this zloty, but like, so, let's just say a non-mainstream area. Like you don't care about the Nvidias and the Apples.
I do care about Nvidia 500. I like it.
Yeah. But I mean, like, everyone's talking about that. That doesn't interest you. You're all about like the non-sexy areas of the market, like this zloty.
So in our team meeting yesterday, we were talking about it, and then I got a call from Fox during our meeting telling me that they wanted me to swing by to do some TV. So I was like, all right, what should I talk about? So the team bet that I couldn't say zloty. I said it twice in the segment. 2 zlotys for the win. You guys underestimate me. Don't do that. Don't let it happen again. Come on.
Mara went up for a day, so now that makes me the crypto king. Thank you, Chris.
Crypto king. Wow.
Yeah. Well.
More like the crypto gesture, if anything, maybe.
Yeah.
Hey, Strazza, how about my pot stocks yesterday, huh? Just for a little bit.
Can we talk about how tomorrow is the beginning of the old Santa Claus rally?
Yeah.
Tell me more.
Well, the last 5 days of the year and the first 2 days of the following year is a 7-day period known as the Santa Claus rally. And this particular 7-day period tends to come with exponentially greater returns. I think like 2.5 times the average return for any other 7-day period throughout the year. It's actually very positive, that particular period. But so last 5 days of the year starts tomorrow. First 2 of the following year, it ends on Wednesday the 3rd. Wednesday, January the 3rd is the end. So it's when the market does not go up during that period that it's a good heads up that something might be weakening underneath the surface, right? So we're just looking for market to rally like it typically does. That's it. And come next year, if we look back on that period and the market didn't rally, S&Ps fell, that's 0.1 for the bears, and then we'll see how January works. So you got the old January barometer. As January goes, so goes the rest of the year, right? So if fund managers are coming in and they're not buying stocks in January, that's a good heads up that they're probably not going to be buying stocks later in the year either, right? It's perfectly normal for them to coming in hot. And when they don't, it's a problem, right? First 5 days of the year. Stocks aren't up in the first 5 days of the year. Again, heads up, something might be wrong. Fund managers come in hot. And when they don't, it's a worry.
What's your read on sentiment right now? Seems like it's getting a little bit too easy for people to make some money out here.
I don't know, man. I was I was doing my city things yesterday, watching the market and, kind of on my way home, I'm like, looking at Twitter and people are like, oh my God, this is it. This is the big one.
Oh.
I don't know, man.
I was on a Spaces yesterday. This is why I ask. And people were freaked out.
Yeah.
The host of Spaces actually said to me, they were all talking about this massive sell-off. And he said, okay, Steve, what do you make of this mess? He goes, what are you shorting today? I said, what? Callie Cox was on there with me.
They're quick to the trigger, man. They're quick to the trigger. I don't think sentiment is frothy at all. I'm not getting my high school friends texting. I'm not getting any of this.
Yeah. It seems like people were jumping all over this little afternoon of weakness yesterday and seemed way too giddy about it. And then we're just right back to green here today.
Yeah, why don't we do a quick rundown here? Dow futures up 230 points today. S&P futures, so that's about 60 basis points. S&P futures up 37 handles, 80 basis points. NASDAQ futures up a full percent, 173 points in the NASDAQ futures. Bond futures up again. Stocks and bonds continue to move together. Are you noticing? Gold flat, silver flat, copper flat, oil down 1.5%, and the dollar getting slammed. Guys, that's all. That's all you need to know. Dollar's getting slammed. Stocks are going up. Right? That's what you're seeing. Dollar's getting slammed again. That's what you need to know.
There's a lot working right now. Everybody wants to talk about these growth stocks. Look at the metals stocks. Look at the materials names. Look at XME.
How about the funny money? How about the funny money with Bitcoin up 1,400 points today? Ethereum up 60 points, 2.5%. Solana up 8%.
Avalanche. Are they mooning yet? Not mooning.
What is the definition of mooning? I think I've asked this before.
Parabolic.
Okay. 1.6 trillion on total crypto market cap, continuing to go up. It's bull market stuff, guys. Bull market stuff. And the sentiment is really, really interesting. You get an hour correction yesterday, and people were freaking out like the market's going to crash and recession and yield curves and
you know what though?
Black Monday.
Yeah, it was only one day, but somewhat unusual to see just random selling at 2:30 in the afternoon.
What's unusual about it?
I don't. What's unusual is the market turns every day, but not. It seemed like the velocity was somewhat quicker yesterday. I don't know, and the fact that there was no clear reason, which there doesn't have to be, obviously.
But there never is.
Sometimes
they might be better at making things up than other times, but they don't know.
I've been reading and listening a lot since yesterday afternoon. It's getting thrown out a lot that this is a technical correction. Yesterday it was a technical What isn't a technical correction? Just because the news can't find a way to explain the move doesn't make it a technical correction.
They're journalists for a reason. They don't actually do anything.
Oh God. A lot of fun articles out there this morning.
I saw the zero DTEs were blamed.
Can somebody tell me about this conspiracy? Because I have no idea what this is. Did the Fed become too lazy of an argument, right? So it's not the Fed did it anymore. It's the zero DTE. Seems to be the same people.
I don't know. Yeah.
We don't write glorified gossip columns around here, but and by the way, just because you went to an Ivy League school doesn't make your gossip columns not gossip, right? Like you're no better than, writing about a Kardashian breakup or perhaps an NFL trade rumor. It's just gossip for adults, nerdy dudes.
The
Look,
Giants.
sometimes there is a reason. Sometimes there is, like, for intraday, for like
But
a random
all the time, who cares?
Okay,
right?
That's fine. That's fine. Yeah.
Sometimes there might be a reason, but all the time it actually doesn't matter.
We got football on Christmas this year. How cool is that?
Isn't there like a really, really good game? Like, I don't know what it is, but isn't it like it's like a big one?
Ravens Niners.
That's a big one. Yeah. Okay.
You want to know what a bummer? You want to know? I was a little bit bummed out. I didn't realize it until after. I was supposed to be on Liz Clayman's show yesterday, but I ended up doing Charles Payne's show. You know who I would have been hanging out with in the green room at Liz's show? Tommy DeVito's agent.
No.
I would have been in the green room, and I would have been like, "Oh,
oh, that would have been cool."
I know. I know.
Oh, that would have been so cool. Did you hear the thing that happened with him this week with the pizza thing?
Yeah.
So stupid.
People were too sensitive. People got too much time on their hands.
All
Wouldn't
right.
that have been funny? I would have walked into the green room to see this character sitting there with his green suit or whatever.
You would have had to like sneakily take
a
picture. Like, just to take a picture without him noticing that
you
you're
think
taking
so?
a picture. No, I'm sure he would have gladly taken a picture with you. All right, let's do state of the market. Let's talk about some stuff.
Guys, why don't you tell me about these overbought conditions? Why should we care? You know, throw that up there, Spencer.
Yeah, the market's overbought. Did you know that?
Ooh, put me in, coach.
Strazza, why don't you kick this one off? This is a heck of a chart. Heck of a chart there, Strazza. Looking good, clean. You know, Christmas colors. You know, you really went all out on this one.
Oh yeah, look at that.
Can we give Alfonso credit for this one, or was it you?
No, this was me.
All
Holiday
right.
themed. Holiday themed.
I like how you did that. That was good. Nice job. All right. So what do all these lines and colors mean?
So I can't help but think of May and June 2020 over and over and over again when I go through our breath books lately.
Zoom it out, Spencer, so you can see.
So we're seeing these spikes in new short-term highs. We're seeing these spikes in overbought readings. We talked about it last week. Right? The most highest percentage of stocks overbought in the S&P 500. All the data that we have going back 30 years. Last time this happened, I just went back. So what happened after we got these, wild breath readings during the last cycle, 2020? Looked at the charts a little bit. I said, wow, literally 3 days after we got that 43% reading shown in the lower pane here, we were down 6% in a single day, just about. Everybody panicked. Everybody freaked out. Okay. The bull market's over. We're rolling over here. We're going back to retest the COVID lows. That was the worst day since, by far. Market recovered a day later, went on to rally about 60% in the following 18 months. The point I'm trying to make is simply that over the very, very short term, some of these exhaustive breath readings could result in some selling. They don't have to, but they could, right? The point is, when you zoom out, this is a longer term signal, right? It's talking about the health of the primary trend, right? Not today's trend or tomorrow's trend or even this week's trend. So maybe a little give back and then go. I think that would be very normal based on what we've seen other times throughout history when we get these extreme readings. So I just thought it was just history, a little market history lesson. Because people were freaking out yesterday.
Yeah, it was good to see. It was good to see. People's just heads exploding.
We're down like 1%. We're down like 1%. I mean,
drama queens. Too much leverage, maybe.
Yeah. Total drama queens, especially when you're that close to an all-time high, right?
Because it was a technical correction.
Yeah. Technical correction. What kind of asshole do you need to be to say that? Like, seriously, technical correction. Retire. Like, seriously, just end it. It's over. Just go away.
Isn't it great how technical analysis tends to be what all these people go to when there's nothing else?
I was told it was voodoo.
Yeah, whether it's a volatile market or anything that can't be explained, then, the technicians. It's the technical correction. This is technical stuff. Okay. Maybe.
What's worse, the idiots that write that or the ones reading it? and actually believing it? Who's worse?
Oh, come on, dude.
No,
Very entertaining. I read a
hold
couple
on.
of them this morning. Very
The
entertaining.
people that write it are getting it from like one person on the street who's saying that to them, right?
What was that scene with like Will Ferrell? We are all now dumber, right?
Yeah.
We are all now dumber.
No, that was Billy Madison.
That was Billy Madison. That's right. Sorry.
How about there was just more sellers and buyers?
Oh, Spencer's
Hey,
too much.
Spencer's been hanging out with us, huh? Come on now.
Moi?
Dude, hilarious. I want to talk about some of the things that we brought up in our meeting yesterday. So we do our team analyst meeting every Wednesday at 11 o'clock. And, you know, we're going to talk later about sort of Sean's aggressiveness. You know, generally, I would argue that this aggression will not stand, man. But in this environment, Sean is being very aggressive. How do you feel about that, Strazza? We're not used to that.
We're seeing a whole new side of him. You know, going to rock and roll concerts, YOLO.
Well, he's always done that.
Not taking half off.
You know, traditionally when we buy calls around here, we like to take half off the table on a double, right? It's kind of like just best practices for us. And I really like that practice. I've embraced that. You know, that's my move, right? That's my move. We got it from Sean. That's Sean's move, and it's my move. And now he's like, nope, we're not doing it. And, you know, we're putting on trades and, you know, we have aggressive targets. And I'm like, all right, so we're going to take half off the table there. He's like, nope, maybe a third. I'm like, damn, son. Very aggressive, Sean, in this environment. So, you know, Sean is the old man in the room, right? He tends to be slightly more conservative, generally speaking. And these days, he's more aggressive than anybody else. Is he not as aggressive as Strazza? Strazza's still the most aggressive?
It's a different kind. No, it's a different kind of.
Strazza, our chief YOLO officer?
I think the point is you should act differently in different environments, right? You could.
And he is. Kudos to him, right? Kudos to him.
You can take more chances. You can get a little creative. You can let him run. I think you should. Now's the time.
Yeah. So volatility is super depressed, right? So these premiums are super cheap, man. We're going out to next summer buying calls.
Long calls. That's it. It's all you need.
Because think about it. You know, we like to think of it like a quadrant, right? You could be bullish, you could be bearish. You could be bullish in a high volatility regime. You could be bullish in a low volatility regime. You could be bearish in a high volatility regime. You could be bearish in a low vol regime. Depending on where and which quadrant that fits in, there's different strategies. You know, if you're bearish in a high vol environment or you're bullish in a low vol environment, there's different strategies that are best for that particular type of environment. And our favorite strategy when we're bullish in a very low volatility environment is to just buy calls and go out as far as humanly possible. And we're going out to next summer.
Yeah.
And we're being patient with taking profits, you know, so
a lot of June calls.
A lot of June calls. Yeah. A lot of June calls I'm noticing. Financials. I bought Wells Fargo yesterday. Wells Fargo. When was the last time I bought? I don't know that I've ever bought Wells Fargo.
I'm still kind of thinking about that one. Feels weird.
does feel a little odd. But that's okay. You know, if we can't get too comfortable, right? Once you start getting comfortable around here, that's no bueno, right? You got to be a little bit on your toes.
Not having exposure to banks right now is a huge mistake.
Can we talk about this comeback in Japanese yen? You want to talk about one day not making a trend? Yen was getting the crap kicked out of it earlier this week. It's all the way back.
BOJ things, I hear.
Yeah, I guess if you're Spencer Israel, you need a reason. You know, for me, I don't really care. I'm more interested in the fact that they knocked him down and they brought the yen back hard, dude. Brought it back hard.
Yeah. You know, Japan 10-year. God, these European yields just continue to crater every day. All right.
And emerging market currencies continue to act well. I mean, just look, go down that list. You know, Brazilian real, nice bounce back after selling off yesterday. Look at the Mexican peso, bounce back hard after that reversal yesterday. Looks fantastic. Of course, how can we talk about emerging market currencies without talking about the old zloty? Again, coming back hard. Strazza, they're knocking this dollar down. And I mean, this dollar's getting destroyed right now. And that's not an exaggeration. Like the dollar's really getting hit hard for currencies. You know, I've been pounding the table about this dollar thing for as long as I can remember, to the point where it's just getting annoying, right? Like I feel annoying. I'm annoyed at myself. Just
Yeah.
constantly talking about the dollar.
No, it is annoying. Yeah.
But how can we not obsess over the direction of the dollar? It's been such great information. We can't ignore it.
So to that point, what do risk assets look like if dollar and yields stop falling? What if we have a dollar back above that 102 level, or yields rallying back to and maybe through 4%?
Like this dollar index is going back to the 90s, first of all.
Yeah, but do all those gains go away, right? Like the 10 years fallen 120 basis points in less than 2 months. That's the rally that we come on here and talk about every day has everything to do with that.
I mean, I think yields have a long way to fall, and so does the dollar. That's good for stocks. No?
What if we see a big counter trend move higher in these intermarket assets?
Yeah. And what if somebody drops off 12 lobster tails this afternoon? Like, we'll cross that bridge when we get to it. We'll grill some, we'll boil some, we'll see what happens. Maybe stuff some with some crab or something, Same thing with the dollar. Like, I got to see it, right? We've seen the exact opposite. The dollar's getting the crap kicked out of it. You see the zloty this morning? See that peso? Let's go.
So just to be clear, there's no game, there's no challenge. You don't have to say zloty on here. But
the three, to me, the three leading indicators here have been Mexican peso, Brazilian real, and Polish zloty.
Oh God. Okay.
So when you go down the list of emerging market currencies, and I highly encourage you to do so, if you have long equity exposure and you're not following the zloty, I don't know what you're thinking, man. I don't know what you're thinking. It really all comes down to the dollar. And it's just the dollar index is a lot of euro. Euro's obviously strong this morning. Dollar index is getting slammed. Yen obviously is ripping too, so that helps. But it's more than that, right? So yes, the dollar index is a lot of euro. Yes, it is a lot of yen and British pounds. Yes. But when you look at the emerging market currencies that have zero representation in the dollar index, you're seeing strength there. That dollar weakness is evidence of risk appetite. And, well, you're seeing it. Stocks making all-time highs. All the funny money ripping 1.6 trillion in crypto assets. I feel like we were just at a trillion, just yesterday.
I think this is getting, if those are the tailwinds, and that's what has helped push risk asset prices higher since late October, we're getting a little long in the tooth here.
Are they tailwinds, or is it just the fact that money, these safe haven assets are just not necessary? They're not attractive. Consumer staples continuing to make new lows on a relative basis.
Tailwinds. Look at the groups that are rocking higher, right?
Yeah, but is it the tail wagging the dog, right? Is the dollar weakness what's pushing stocks higher, or is it the fact that stocks are higher? You don't need the defensive status of the dollar.
No, since this move started happening, it's banks, it's real estate, it's metals, it's the biotechs and the super long duration stuff that need to raise capital, right? It's everything that is super tied to interest rates outperforming the best. So I think since we came from such an elevated level, right, you're going to see outsized moves from those super interest rate sensitive groups. Maybe once we get into a more normal level or fall back into this range, then you could say maybe not so much, but right, just the price action alone, I think, suggests that. Okay, here's the point I want to make. The US 10-year, oversold for the first time since. Don't cheat. Oversold for the first time since.
Last year?
March of 2020.
Wow.
This thing doesn't get oversold, right? So I'm just saying we're extended now to the downside in yields. You get a little bounce higher, don't freak out if stocks come off a little bit and start digesting gains.
And let's also remember that the dollar had it right. When yields were still going up, the dollar was already rolling over. The dollar had it right.
Yeah, okay.
So the bond market eventually caught up, but the dollar had it right.
So dollar moves first is what JC is saying.
But what if what Steve is talking about, which is perfectly reasonable, what if it happens to happen during the Santa Claus rally?
It's not going to be a great Santa Claus rally, and that's okay. Santa came early this year, I think, in a lot of ways.
No, that's not how it works.
He can never come early, Steve. You didn't know that?
He can never come early. It's the last 5 days of the year, first 2 of the following.
He is never early, nor is he late. He arrives precisely when he means to.
That's right. And if he don't show, that's the problem. So we'll see.
It was more of like a Hanukkah rally this year than a Santa Claus rally. This came a few weeks earlier.
That's right. That's right.
Yeah.
Okay, but the point I was okay, fine. That answered my question. But what you're saying is like perfectly routine, right? Like a routine sell off. But what happens when you put routine sell off with once a year seasonal signal and you put them together? Is sort of my question, but I don't know.
Stocks are supposed to do well this time of year. They've been doing well this time of year. There's nothing to talk about.
Okay.
We'll have a lot of fun seasonal stuff to talk about in January and at the end of January.
Yeah, because you got the January barometer, you got the first 5 days, you got the Santa Claus rally, you got a whole bunch of stuff. The trifacta is what Jeff Hirsch calls it.
That's right. Where's my almanac?
January trifecta.
Yeah.
Was there was like a jobs thing today?
Well, it's Thursday, so we have jobless claims every Thursday. Every Thursday since the beginning of time.
All right, and was it as good for you as it was for me?
No, I said this before. I stopped looking at jobless claims like a year and a half ago, or maybe because they just weren't. There was a time during COVID when they went, literally off the charts. But other than that, it's not an especially interesting indicator. So I don't tend to look at it every single week. I can check for you right now, but it's a pretty routine number. It's always a routine number.
And what do the kids want these days? The kids want bad jobs numbers so that they could cut more. Is that what it is all about, or no?
That's like
the market's still trying to figure that out. Is good news good news, or is good news bad news already?
I hate that.
I think they mostly want good news.
And how corrupt are these numbers?
They want this soft. They want a soft landing, right? Soft landing.
Why is everybody always waiting for a landing? I don't understand what this landing thing is.
Some could say there's not going to be a landing. What landing? There's no landing. We stay in the air.
Well, I'm interested in the takeoff. That was 18 months ago.
What's going on with the China, Spencer? What? I mean, China's just the chart is just burning out here.
I think just communists being
every day
for being communists.
They're stirring the trouble. I'm seeing a lot of geopolitical headlines.
Yeah. You know what I saw? You know what I haven't seen it for a while, and I saw it this morning for the first time in, I don't know, maybe for the first time in all year. A North Korea headline. Forget about that sometimes, right?
The missile one.
What are they up to these guys?
North Korea is just saying, just so you know,
missiles.
We have nuclear weapons. Right?
That's probably not a good thing.
Remember those nukes? Still got them.
Still got them. Still got the nukes. I was like, I haven't seen that headline for a minute.
Well, it was the China-Taiwan thing yesterday, which
there
were some murmurs that had something to do with the selling, but I think it was a technical correction. And then this morning here, I'm seeing China's picking on the Philippines now. Why are they such a bully? Why gotta be such a bully?
Yeah.
Too bad.
I don't know.
Look at this Shanghai Composite relative, lowest since 91. Wow.
When I was in college and early in my career, this was the exciting region. This was the big story, China.
And it was all demographics, right? It was all demographic story.
All demographics. And it ended up not.
It was a fugazi.
I fell for it.
Dude, look at that chart. This has been going on for 15 years now. Terrible. Straight line lower. Really bad. Can't own them. Problem stocks.
What about the educational ones?
I'm long.
But that's it. That's the exception.
They're
It
trades.
makes no
You
sense.
know, gap fill. I have some towel. I took a shot on that go-to. Those things are already worthless. You know. That's it.
Why don't you throw up slide 2, because this seems to be a trend that investors are having a hard time wrapping their heads around.
Hey, look at that. Good time for the 60-40, folks.
So the 60-40 has been converted to 100. And that 100 goes up. It's 100 up or 100 down. There's no 60-40. It was always stupid. Now it's dumber than ever. 60-40. Seriously? 60-40.
Jim Rogers.
It wasn't so dumb like 50 years ago.
Look at the Jim Rogers comment. We love Jim Rogers. We're big Jim fans.
It was dumb 50 years ago, Spencer.
People didn't know until like the 50s that stocks outperformed bonds.
They didn't know.
In different environments over the decades, you've had positive and negative correlations between these two assets. For the majority of our careers, we've seen negative correlations with S&Ps and bonds, where when stocks are under pressure, money flows into treasury bonds as a safe haven. We're not in that environment. They're moving together. Bonds are not a safe haven. The safe haven's been the dollar. So I think investors are having a hard time wrapping their heads around this regime. The worst investors are taking the longest to come to terms with it. And I think that this is a trend that we should continue to look to take advantage of, right? We're talking about lower rates, good for stocks. It didn't used to be that way. But it is now. And I think this is a major trend that we need to be focused on, is stocks and bonds moving together, and also small caps outperforming large. We talked about it yesterday. Those are two really interesting themes right now that I don't know that are getting discussed. I mean, you people, you guys follow the news, right? And then in the news, are they talking about these correlations or no?
No, it's not typically a thing that gets discussed all that often.
Yeah.
I mean, like once a year.
They will.
Yeah, like once a year.
Yeah.
But
and what about the small cap outperformance? Are they talking about that in the old newspapers?
These things will get discussed. When they happen, they will get discussed.
Well, they're both happening, so
not.
There's a lag, Spencer. There's a lag,
right? And you gotta show me more than that, though. You got to give me like a bigger oomph than that.
By the time these yahoos are writing about it, it's probably too late.
They were talking about it happening last year. They were talking about the value growth thing last year, and it never came. They talk about the international versus U.S. It'll come back.
Man, I think that these are two major themes that is just not being discussed, and I'm fascinated by that. You know, this small cap outperformance. This is serious.
Did we do Micron?
We didn't. We can talk about that.
Hit it.
Yeah.
Okay, because this is normal.
Wow.
This is super normal. Again, I keep dunking on this Twitter Spaces. Somebody on the Spaces yesterday was saying, "Wow, look at this sell-off in Micron today. They're probably going to miss earnings." No. The earnings reactions tend to occur in the direction of the underlying trend, the short, intermediate term trend. Mostly.
This is true.
One day of selling does not make even a short-term trend.
This is true, but I will also say that sometimes, a company reporting earnings on a down day for the market doesn't. It may not matter what the earnings is they'll sell it regardless.
Okay, yes, but in literally the complete opposite environment of the one we're in today. One where the tape is characterized by selling pressure and afternoon sell-offs, right? And low
afternoon sell-offs.
Dude, this was one day after the market had been up for 10 straight days, right?
Yeah.
Okay. Out a little bit, right? The tape has been aggressively relentless bid for stocks for weeks now. So
anyway, we're up this morning. Earnings were actually mixed, but they gave some upbeat guidance above estimates. They cited their surprise, strong AI demand, data center infrastructure, and the EPS guidance and the revenue guidance for the year. I'm sorry, for the quarter, for the current quarter we're in right now, was above estimates.
The sell side, they're tripping all over each other, upgrading this stock here this morning. 13 price target hikes.
Our new 52-week highs, which is what Micron is doing right now, is that something you see a lot of in downtrends?
Literally a third of the analysts who cover this stock are out here hiking their targets today.
How many analysts? 20-something?
38 actually in this
It's
one.
It's a pretty well followed company.
Yeah.
It's 86 billion market cap.
Yeah, but now show me Micron versus its peers.
Making new 52-week highs. What's
Yeah.
the beef? You're saying it's not making all-time highs like
No,
some of these others?
the beef against Micron is it's not AMD and NVIDIA. That's
Right.
the beef.
No, that's fair.
Right. That's always been the beef. So, you know. When was that all-time high? .com 2000? Yeah. All right. Okay. We had nothing much interesting on the earnings front besides Micron. We did have CarMax. I don't really care about that. A couple of headlines we did have that were very interesting to me, just personally. This came out last night after the close. Merger discussions between Warner Brothers and Paramount, WBD and PARA. The tickers there. Just a report that the C met.
It came out during the day, and then Wall Street Journal came out and said, no, it's not. And then something came out later saying, yeah, kind of talking.
Well, it sounds like there's definitely not a deal, but they definitely had a meeting about it, is what it sounds like. So, very interesting. Very, very interesting.
Some of the worst businesses you can find.
It's
and why is that? What's so bad about them?
It's such a crowded space. We talk about it all the time.
So
streaming.
The reason they're bad businesses is because they've hitched their wagon to a dying model. Actually, kind of in a way, two dying models. One model that is cable television, which is never coming back to where it was, and the other model is streaming, which no one has proven to do in an economically viable way. So they're stuck between a rock and a hard place.
For 10, 15 years now, they merge, they spin off, they merge, they spin off. They can't figure it out. They can't consolidate enough to make the economics work, is the problem in this industry. They're going to consolidate until there's nobody left. And they'll still be shit businesses. Look at these charts. Terrible. Remember when the Paramount was going crazy off the COVID lows? Because they were just like talking about launching a new streaming app?
No, that run in that chart,
10 to 100.
That was Archegos is what that was.
And it was a different ticker back then, I believe.
It was Viacom. It was Viacom.
Oh, it was Discovery. This was Discovery. This was DISC or something like that. I'll go find it. It's on the blog.
I thought this chart is Viacom, I thought, but
and that's my point. You can't keep track anymore. They merge, they unmerge, they merge again.
Oh, thank you. Yeah. Ravi's right. WBD. That was Discovery. That chart was Viacom.
Why would you ever question me, Spencer?
No. You're wrong. Ravi's right in the chat. WBD.
WBD was Discovery?
Yeah, because then it's in the name. Warner Brothers Discovery.
Oh yeah, go look at that one. Yeah.
2020. But that run up was all Archegos swaps, and no one knew what it was until he blew up, and then realized it was all just leverage. So anyway,
fun times.
Okay. Fun times, right? Exactly. Okay, so we had the Micron, we had the merger. I thought that was interesting. Nothing else really caught my eye as far as news or anything really. I know we get don't we get Nike? Yeah, we get Nike tonight. That's interesting.
Talk about a slow news day. You got the jobs, which only JC cares about, a nat gas report, tips auction, 5-year tips auction, Canada retail sales. You can do that. Japan CPI. Anything stand out?
Yeah, no. Hey,
I'm more interested in the funny money continuing to act really well.
Steve, your favorite, or is it maybe it's JC's favorite? Twist Bioscience. That's one of your guys' favorite. Up 8% this morning. No volume though, so I
Been
wouldn't
good.
put a whole lot into that.
Been real good.
Not a lot of volume, so you got to give the profits back.
No, I'm saying call me at 9:31, right? Like, and then we'll see where we're at. But
The miners, some movement from the miners here this morning.
Yep. BTC had a heck of a day yesterday.
Which one?
BTC.
Bitcoin?
Yeah. You may have heard of it.
I'm more interested in the Solana.
Making new 52-week highs as we speak. Solana.
Yeah. Lily. Downgraded to outperform.
What does that mean?
Wait, what?
Oh, from like the best idea.
Probably like a conviction buy.
Yeah. Okay.
Seriously, what kind of asshole do you need to be?
You know what? I used to like hate watch ratings, but ever since I'm with you guys, I don't even hate watch them. I just ignore them now.
I mean,
downgraded to outperform. Seriously, bro.
That's great. Hey, when you're a conviction buy, you can only fall from there.
I mean, listen, our short's not working great, but it hasn't been going up.
Dude, it kind of is working great when you think of what everything else has been doing. Or most
relative
things,
well,
right?
Right. Everything's been ripping, and this one has not, and we're short, but we're not making as much money on this as we are on the longs.
Wait till we get a nice little corrective wave. See ya, Lily. But no, Novo looks pretty good, so that's confusing me. NBO. Novo's looking all right. Better.
We're both kind of like in these ranges.
Yeah.
Starting to see real bottom of the barrel stuff catch bids here.
Like what's bottom of the barrel to you?
Like Virgin Galactic. It's like
Yeah.
bottom of the barrel stuff.
Yeah.
They call them shitcos.
Sure. Yeah. Nikola, bottom of the barrel stuff, right? Catching bids this morning. So I don't know.
Well, isn't that why we look at emerging market currencies? I mean, did you see the Philippine peso today? Just ripping?
No, I didn't actually.
Yeah, look at this Philippine peso right now, ripping. South Korean won up 66 basis points. Look at that. Zloty up 60 bips. South African rand up 55 bips. Mexican peso up 40 bips. Brazilian real up 75 bips. All these sell-offs that we got yesterday in these Forex markets are all coming back. So really curious to see where we close out the week. Man, it's gonna be a hell of a Saturday morning chart session, you know.
Insider buy just hit the wire for Nucor.
Anything noteworthy?
It's small. But I mean, look at that chart. Looks great.
I'm sure there's a lot of insiders in steel companies that are licking their chops right now. Maybe.
It sounds like the U.S. Steel merger is going to have some issues.
Really?
Oh yeah. Of course. Come on now.
Yeah.
Japan buying a company like that?
They're already Congress people are coming on the networks already.
Is it one of those things like our good old American company can't be owned by the Japanese? It was one of those nonsense things.
The problem is anything in Asia, China has their hands in. So it's owned by the Japanese, but there's Chinese stuff going on there.
Don't we own the Japanese? No, kind of. Like we run their military. You know, that's not enough.
This is very sensitive. Okay, if you're going to let a foreign entity buy a major U.S. company, it's very.
Is that a major U.S. company? U.S. Steel? Who gives a shit?
Come on, it's
a $10 billion company.
No, but it's material.
Solana's worth 4 times that.
No, it's a major input to production processes, right? That's what it is. Might not be a super valuable business, but steel's important.
Yeah, it's a $10 billion company. Like, who cares? Like, why is this such a big deal? Because it says U.S. in the name of it. Like, we sold Anheuser-Busch. See, bye, Felicia.
Has nothing to do with that.
No?
No.
All right.
Wait.
I don't know.
What?
Listen.
Who owns Anheuser-Busch? Owns Anheuser-Busch?
InBev.
No, InBev.
Oh, they sold to InBev?
Anheuser-Busch is a European beer.
It's a Didn't you know Bud Light is a Belgian beer now?
AB, and Bev, right? There's like 4 tickers for that thing. Yeah.
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 Bud Light is a good European beer.
But the regulators, right? There's not going to be antitrust issues really around beer.
Why?
Something like
beer.
steel, which is a critical input in the production process globally. Yeah.
You don't think they're just using that just to like rile up their constituents and make it a political thing?
Yeah, probably.
Assholes.
But I'm not saying that they're wrong. I don't know what they're talking about. Anyway, and you could see it in the stock, right? If the market was pricing that this was a done deal, it's going to be pinged to $55.
Thank you. There, that's how you know. That's the story right there.
And it never was. I think maybe 50, low 50s on the announcement, and now it's kind of
we're at $47 right now.
Churning lower.
That's a hefty discount.
Yeah. So we'll see.
Can we just do a little hot corner because we had quite the transaction?
Yeah, and we didn't even do it yesterday, so maybe we can cover both at the same time.
Yeah,
There was nothing to talk about yesterday.
There's really nothing today either.
There's one.
All right, fine.
All right.
Hot corner. So hot right now.
Global Star. It's a telecom.
Yeah, G-Star. $1.2
a
million
satellite, right?
here from James Lynch.
That's a satellite company.
Telecom, Louisiana Telecom.
Yeah, I mean, this is. I can't get excited about a telecom stock in a bull market. Can't do it.
Throw up slide 2 there, Spencer.
This options flow in the Marvel. Maybe that's something.
Big base. No?
Nah.
$3 billion telecom? Nah.
If that's what you're into, what's the yield on this bad boy?
Nothing.
Oh, God. Then really, telecom and you're not getting a yield? Ooh, yikes. I don't know.
Yeah. $1.2 million purchase. It's not nothing. It's not a piker purchase.
No.
All right.
But it's been quiet, right? Quiet week. We talk about how it's low volumes in the market this week and next week. We're seeing it from the insider filing scan.
Yeah.
Very little there.
For that matter, yeah.
Seeing it in the option scans too. Very little there, right? That's why the ones that have been popping off really stand out. That UI path, I mean, they are just hitting these options day in and day out. Massive volume. Pretty cool.
GSAT's new CEO was Qualcomm's. Fun fact from Bill. Thanks, Bill.
Talk about a demotion.
Yeah, Qualcomm's a big company.
Come on. That's not. No. Oh, what the hell? Were they on the calendar today?
Hmm?
Dude, Carnival always does this shit. They always reported the most. Carnival just reported.
EPS beat by 5 cents, revenue beat.
They always report the most random days and the most random times. All right, Carnival Cruise. What do we got here?
Hey, did you see that chart that I dropped in the chat yesterday? Grab that one spot chart, Alfonso. They do all of the spas on cruise lines and like destination resorts. A lot of casinos like Mohegan Sun, Tropicana. But it's a spa company. Health and wellness is a mega trend, my friends. Have you heard of this? Have you heard of the health and wellness?
It's
secular growth trend?
No.
Thing.
What the heck is this?
Spa holding company. I just told you what it is. They own and operate the spas on cruise lines, resorts, casinos, yada, yada, yada. I don't know. Maybe.
It's a nice base.
I'm bullish spas. Right? I think everyone should get more massages. And you can even invest in it. Long massages, OSW. New highs. Boom.
I got they just opened up a new spa here in the local casino. It's supposed to be really dope. So I got my wife some spa stuff for Christmas.
These guys might operate it. Look into it. They show all their businesses and brands on the website. I was looking through yesterday. Is that the Bethlehem Casino? Nice place.
I think it's called, what's it called? It's called Wind Creek.
Yeah.
It used to be the Sands. Now it's called Wind Creek.
The boys have been there.
Yeah. It's where the old Bethlehem Steel is. Now it's a casino. Speaking of steel.
Does this theme fit at all with Wegovy and Eli Lilly and Ozempic and all that, or not really? No.
Are you saying is that a part of the health and wellness trend?
Yeah.
I guess so.
How about Hershey's? And that thing can't stop going down.
You bought that?
Did I buy Hershey's?
Is that what you just said?
That was on Mr. Hirsch's free lunch list, I believe.
This thing is just getting slaughtered.
Yeah,
man.
52 closed every day.
Every day. It's a bear market for chocolate. How about this? How about even though you got that some selling in equities yesterday, consumer staples still made new relative lows? How about that?
On a down day is what
On a
makes
down
that
day.
stand out, right?
Yep.
They should be outperforming, not making new relative lows.
That's exactly right. Low volatility just sucked yesterday.
They don't want them. And again, I'm sorry for being so unexcited about telecom stocks. It's the same thing, right? You don't want to be in these defensive names.
You don't need to apologize. You don't need to apologize at all. If you don't want to own Telecom, you don't have to own Telecom.
Okay.
I don't think people
Is
who
this
own
the right
Telecom
environment for telecom?
want to own.
I think if you own Telecom, you should be apologizing to
I
your
think
family.
people who own it don't want to own it, and they do. So
Yeah.
It's a problem group. Yeah, big problem.
Let's do chart report quickly, and then we'll bring on our guest today.
Sweet. All right, what do we got? What do we got?
Chart of the day was from one Ryan Dietrich, who will be on the show Monday, actually, or Tuesday. Sorry, Monday is
that considered a chart? Looks more like a table.
Tweet of the day. I don't know.
Looks more of a table of the day than a chart of the day.
Perhaps.
Not to be a stickler.
Okay, fine. Fair enough.
Just saying.
This could happen.
Let's see what else we had. Oh, look at that. Look at that.
If Santa Claus should fail to call, bears may come to Broad and Wall. Shout out, Yale Hirsch. Shout out. Legend.
All right, let's see what else we had. Just a meme. Look at that. Oh, look at that bearish engulfing candle. I'm just kidding.
I like how they make it very red to make it even more scary.
Yeah. He put Arun's meme in.
What was the meme? What, just crybabies?
No, it's
Pat loves a good meme.
It's people getting nervous. There we go. Anyway, we're on what, like a 7-week uptrend? Yeah, big red candle. Look at that. Wait, when was that one day we had that big bearish engulfing? What was that? Like September? October? You know what I'm talking about?
Nope.
Bill, it's not Google's fault that they had nowhere else to put these crappy stocks than communications. Google
has gained 16% of the last 36 trading days. Wow.
Communications is actually a pretty diverse sector,
On an equally weighted basis.
Yeah.
Cop weighted, it's Facebook and Google.
Pretty much none of the spiders are diverse.
Hey, this tweet sounds familiar. Where have I heard this before? Oh yes, like an hour ago.
Hey Ma, I made it.
Look, Ma, I made the chart report.
Anyway, guys, chart report is put together by one Patrick Dunawilla. He sends it out for free every single day after the close. If you want it, the link is right there in the description on YouTube. It's right there in the description below the video. Just click on it and sign up. Totally free. Get it in your inbox every single day.
Really good.
Yeah, really, really good. All right. Should we bring on John Salama, and then we'll have Sean join in a few as well?
Yes.
Yes?
Yes.
Okay. I think John, we have some charts as well from him. So,
cool.
Or John sent us tickers, and then we We had the chart. So here we go. All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Salama, what's up?
Can you hear us?
What up, brothers? Good morning.
We
What's going
got you.
on, my man?
Yeah, can you hear me okay?
We got you.
Loud and clear. You know,
Happy Thursday.
John and I were we were together in the city a couple weeks ago, and he starts talking about options, and we was going on and on and on. I'm like, this is a conversation that we should have with Sean in the room. Where I really got a lot of my options chops. Why don't we set the stage a little bit, John? What were we talking about at the bar? I was double fisting Jameson's. So why don't you refresh my memory?
Yeah, so I was just asking. I had a lot of questions about your 25 Delta lifestyle and how Sean comes to strategizing the trades, and especially in this market, trying to bet some bets on mean reversion, others extension of the trade. So I got like 9 tickers I want us to look at that have been thriving this week for one way or the other, 2 extremes, and for the past year they've been noteworthy. So I think we'll get something from all of them. And
so are you trading options only?
No, ETFs as well. The VIX is too low. I used to have a credit strategy, but it's too tough, man. You got steamrolled too many times, selling contracts for 80 cents, buying them back for 3.5. Stop doing that. Leaving too much alpha on the table. So now I do spreads or a lot of pairs trades.
Yeah. And so then you're doing this for your own personal account?
I'm with a prop firm. I'm with Maverick Trading. So they give us leverage, and you have your trading plan, have all your risk management, exits, entries, signals, triggers, all that, and they let you do your thing on an island, basically.
That's pretty cool. That's pretty cool. I was hanging out with a Ernst & Young auditor for Millennium and some of these other private equity shops and things like that, and I'm like, that sounds terrible. He's like, oh yeah, it's miserable. I mean, somebody's got to do it.
Greek exposure. It's crazy.
He gets paid really well. So
John, you want to run through a couple of charts on your radar, and then we'll bring Sean on right after the open?
Yeah, sure. I'll do some of the less option ones first. I have some specifically for Sean. I want to see if we would both set up the same like spread swaps. But I'll do some just with you guys to put them up. Let's do ArcG.
ArcG, done.
All right. So my thoughts on this. Let me blow up your the screen here. It got small for some reason. All right. So yeah, this one has had a resurgence. I know everyone knows that ARC had the best month ever in November. This thing with biotechs, obviously long duration, and with the rate story looking like it's behind us, this thing's really bounced from 24 to 31. Do you think it's got more room? Do you sell it here? Curious what your guys' thoughts was. It had a very strong bounce off the bottom, which was a multi-year low for this sector. For this fund.
Yeah, I mean, it reminds me a lot of biotechs. Looks a lot like it, especially when you zoom out. Overlay a chart of the XBI over ArcG, and you're gonna find some similarities.
Mm-hmm.
So I think it's probably an extension of that. Here, so this is genomics. So I guess it would make sense that it looks like biotechs, right? Probably not too dissimilar.
It's kind of the same thing.
Absolutely. It's like
I'll show you
IBB or XBI. Yep.
Yeah.
So here I'm putting XBI.
I'm sure this has a little higher beta, but it's more or less the same.
You think that this has higher beta than the XBI?
I'm just making an assumption, but yeah.
I don't know. Here, look, throw up slide 2 here, so you could really see how closely these move together. So I like small caps. I like biotechs. So there's no reason why I wouldn't like the ArcG, right? Like, look how closely these things mirror one another. So that's the trade for me. So I like it. I'm with you on that one. And we're sort of, and you can talk to Sean about that now, but we're really being aggressive in some of our positioning and
running the portfolio. Go ahead.
No, I was just going to say we're being really patient, taking profits in this environment. Like, we really think a lot of these things have room to run in the coming quarters. So just a little bit different than the strategies that we've been incorporating, where if we own calls and a double, we take half off the table. Like, those sort of best practices strategies, we're currently not incorporating. Being very aggressive. And Sean, who tends to be one of the more conservative ones here on the team, he's leading the charge of aggression. So, you know, kudos to him for sort of adapting, you know, market environment that we're in, right? Letting winners run longer. You find yourself in this environment. I mean, you mentioned that your credit strategy wasn't necessarily working because volatility is so low, I imagine. So it sounds to me like you've been adapting as well.
Yeah, absolutely, man. So I've been doing a little bit more single stocks, getting on those rallies. It just really sucks to pay for premium all the time. Spreads aren't working like I said before. And to be honest, I've run a long, short, neutral, and it's been to my detriment, honestly, especially in the past 6 weeks, because now, as you figure, it's ripping my face off much more than the longs that have succeeded all year. So my shorts are hurting me now, even more than my longs, which stinks. So you were talking about Lily in the other segment, making money, shorts just staying still. That's been at least a winning trade, because with this everything catch up. That's one of my questions with, you know, I had a trade about A share or FXI, whatever, for China. I'm betting on it continuing, but I'm curious how he would structure the options trade. But in the meantime, until he comes on, another is USO, if you could open up US Oil Fund.
Yeah, so oil.
Oh, also just the last note on 6% in the past 5 days. So I do a 5 day momentum moving average for these short kind of moves and see what it's done on the past months and percent away from 52 weeks. Yeah.
What are you seeing here?
Oil's up 6%
range
in the past 5 days.
So that's why it popped up.
Yeah, it looks stuck. I agree with you. It looks stuck. I think you could probably, I mean, it sounds so obvious. I would sell at the top of the range and then buy it near the bottom until that absolutely breaks on some OPEC nonsense, or I don't know, maybe some
macro hysteria. I wouldn't feel comfortable selling a strangle or something like that in USO. You know, maybe an iron condor, I guess, if I'm hedged, if I have to, right? But I wouldn't just be naked strangle. On oil, that's a death wish. Something explodes in Syria or something, forget about it. You're wiped out.
On period.
We're naked strangles. We're short naked strangles a lot.
What name?
Well, we actually incorporate.
What's like your favorite on that? It just seems like
Well, we take the most liquid 35 ETFs, and we sell strangles every day on the one with the highest implied volatility. So we actually do that every day. It could be XLY, it could be IWM, it could be GDX. Yeah, the most liquid ones. EEM, right?
I got Sean here. I'm gonna bring him on.
Cool.
Gotcha.
Johnny baby.
Wait, Sean, turn your camera on. There we go.
I guess I had to hit that button, huh?
What's up, Shawnee?
What's happening, boys?
Do you know John Salama?
I do not. Nice to meet you, John.
Couple of options traders. We were hanging out. Did we lose John?
We may have lost John. Hold on.
We may have lost John. That's a bummer. So John and I, we were talking options. He's very interested in our 25 Delta lifestyle.
Never heard that before. All right, we got John back. John, you with us?
You with us, John? No?
I think he's on a delay.
It's going to space. Can you give it a minute?
These satellites.
Oh, kids stays in their bad internet, you know? What are you gonna do? Sean, why don't we talk about this aggression, man?
This aggression will not stand, man.
It is standing. However, you know, some people are entering a world of pain.
I don't know why you're surprised by this, what you call aggression. I mean, we're just trading the environment that we're given. That's all. Are we not being rewarded for being aggressive here?
You know, you're like a Colorado guy with a ponytail. Like, I don't know. You're much more conservative for sure. and you've just really turned
That's a very
around.
cute way. That's a very cute way of you calling me old.
You're not old, but you are you lean more conservative than, say, our chief YOLO officer, Steve Strazza. You know, that tends to be more aggressive, and you know, it's just interesting how you sort of adapted. Oh, you sort of gotten away from some of those more conservative profit-taking best practices that we incorporate here traditionally, and kind of just gone with the wind with those, huh?
Well, if you're not adapting, then you're not really a trader, right? Like you always have to be adapting. You always have to be challenging your assumptions. You always have to be tweaking what's not working or improving what is working. And look, we're in an environment, like I said, where we have been rewarded for being aggressive. Will that continue? I don't know. But right now, that's the environment we're in. So being aggressive has paid. And, I've got the data of the trades I've done, right? I can go back and look at the trades I've been in, and I could see where I've left a lot of profits on the table, where being conservative was not the smart move in hindsight. And so, you take all this info and you throw it into the soup and you cook it up and you come up with something new. That's what we do.
John's interested in our 25 Delta lifestyle, right, John? Why 25 Delta?
Well, here's the thing. It all started because generally speaking, when I like to put on long, simple call trades, which that's not all that I do, although that is my favorite trade, which, is not very sexy when it comes to options trades, but I believe in keeping things simple when you can. And when I buy long calls, I generally like to buy the strike that is somewhere around the 25 Delta. Now, before we go too far down the rabbit hole, I'll say that there's no magic about the 25 Delta strike, right? Like I haven't done like some exhaustive research and it has been proven over time that is the best strike you should always buy. That's not the case. For me, the reason I do it and the reason I prefer it is because it gives me the right mix of leverage for when I get it right and minimal cost for when I get it wrong, right? And when you're buying 25 Delta calls or puts, if that case may be, you're going to be wrong more often than you're going to be right. It's just math, right? A shorthand for Delta also that a lot of options traders will use is whatever the Delta is, in this case 25, that roughly corresponds to a 25% chance that call will be in the money at expiration. It's not exactly that, and it certainly doesn't predict the future, but that's generally the rough math that options traders use. So if you're buying a call that has a 25% chance of winning, well, you're likely going to lose more often than you win. That's just the way it goes. But the flip side of that is that when you do win, sometimes you win very big relative to what you risked. And that's a trade-off. And everything in options trading is trade-off. You guys know that. I don't know if I answered the 25 Delta lifestyle question, but it's more of, and this is, I think, where JC gets us from. Is when you're long the 25 Delta, you're not sweating every tick of the move, at least when you first get into the trade, right? It's not moving. The position's not that volatile relative to the underlying. So it gives you the ability to, sleep well at night, have a little bit more comfort in your position, not be so, whipsawed by every random tick in the market. It's more, I don't know, you can be more chill. I think that's where it all came from.
You heard all that, John, or no?
Yeah, he's on like a 5-second delay, but he's with us.
Yeah, out there in Utah, the internet gets there. So
I got you. Can you hear me?
Yeah.
John, are you in Utah? I know Maverick is based out of Utah. Is that where you are?
No.
No, I'm in New Jersey.
Oh, okay.
I'm lowering my screens. I'm just going to have this up here. All right, we good?
All right. Well,
yeah, we're good. We're on like a 6-second delay, but we're good.
All right. All right. Let's go into some of the. Oh, just another thing, because JC was talking about how I guess you sell the highest implied vol and you do strangles every day. I used to sell, like 10, 15 delta strangles. So in terms of 25 delta lifestyle on the long calls, long puts, do you have something that you have for the sell in terms of the delta just to keep you consistent, or do you just go to the highest IV each time?
The way I do it when I'm selling strangles is I like to sell the strikes that are just outside of the expected move, which generally corresponds with, a 18 to 25 delta. I'm not really specifically targeting a delta on purpose. It kind of works out that way. But like if I pull up an options chain, like in February options, and I'm looking at, I'm just, my trading platform has been real spotty lately with my quotes. I can't get any quotes right now, so bad example. But generally speaking, I'm trying to sell outside the expected move. So you probably know this, John, but the way an easy way, if your platform doesn't show it where the expected move is in the options chain, a good way, an easy way to approximate it is look at what the at the money straddle is quoted, right? Yep. So let's just make up some numbers. Let's say you're trading Google options, and let's use a cheaper option. Let's think of a stock is $100 a share, right? The $100 straddle, which is the long call and the long put. If you bought those together, let's say it costs $4 to buy that straddle. That's basically implying that the options market's pricing in a potential $4 move in one way or the other. So knowing that, I'm generally selling the 76 put and the 104 call because they're approximately $4 away. And that generally corresponds to between 18 and 25 delta. Not always, but usually.
Gotcha. Exactly. Yep. All right. I got 3 charts I want to configure options trades with you. I have some in my head. I want to know what you would do.
All right, let's do it.
You can dance away from the 25 delta lifestyle. You can go right to it, keep it usual, whatever. But some are bets that basically, I'm not betting on mean reversion here. I'm guessing that's going to get more extreme. All right. So we'll do, and I like doing uncorrelated assets. So let's do, basically I want to do XME, getting long XME through March options, and then getting short A share. So nothing crazy here, getting short China. I think it keeps living on the 52-week low chart. We'll start with the XME, going the opposite way, living in the 52-week high chart. Do you want me to tell you my option idea, or do you just want to see?
Well, first tell me what's your bias here. You want to be long XME or you want to be short XME?
No, I want to be long.
Okay. All right. Tell me what trade you're thinking.
So I did similar. Yeah, I'm still in the delay a little bit. So XME. Yeah, this thing hit 52-week highs yesterday. It's been averaging 4% return per month for the last quarter. I looked at the expected move given to March OPEX. I like the idea of getting long the March 61 calls, and I was going to sell the Jan 61 calls against it, and you can do that trade for $1.65.
So you're looking to get long a calendar spread.
Correct.
And the reason you think that is because 61, you don't think it's going to get there by January expiration?
I think it might get just there by January expiration.
All right. Well, I like that trade, but here's how I would manage it once it's on. I don't know if this is something that you do, but when I put a calendar spread on like this, and this would be considered a bullish calendar spread, right? You're not neutral. You're playing for a move higher. If I put that spread on, and basically I would have a number of things that would happen. But the first thing that would happen is if XME trades 261, which is my short strike, it's the strike of both options. If it got to 61 before January expiration, then this is just me. I would close the trade down right then, take the profit, whatever it is. It could be a bigger profit, could be a smaller profit, depending on how close it is to that expiration. And the reason why I would take that profit is because, yes, we're bullish on XME, and yes, the trade today, when you put that structure on, it does have a bullish tilt to it. But when you get to 61, now you're basically in a delta neutral trade. And if it starts going above 61, then you're on the backside of the mountain of that P&L curve, and you're actually going to start losing money as long as you're still in that short January 61 call. So at that point, I don't want to be in that trade. So generally speaking, what I would do is if it got to 61 before January, I'll take the whole trade off, book the profit, whatever it is, I'll take it. It might not be the profit I wanted, but it's a profit nonetheless. Great. Now, that's one way to do it. That's usually how I would do it. But if it doesn't get to 61 by January, that short, as you know, that short call expires away. And then you're left with, was it March? You're left with the March 61 calls with potentially unlimited upside. I don't know if that's what you want in this trade, but generally speaking, that's how I trade calendars. Now, we can certainly go down the rabbit hole of continually rolling that short call out another month, which is totally fine. And a lot of people do that to kind of lower their cost in the trade. But every time you roll and bring in a little bit more credit and lower your exposure in the trade, you just kind of limit your profit potential, because that's one more month. You got to hope that thing doesn't scream past 61 if in fact you want to be long.
Yep. All right, great. Yeah, that's pretty similar how I was going to go against it. This thing just has super strong lags. I want to bet on it going. I think it could reverse in January. I don't think there's going to be like pin risk at 61. I think it's not a bad calendar spread. I'm glad you like it too. Going the opposite end, and I kind of want to combine them. So A-share, the ASHA, the China class. So this one's going the opposite way. 52-week lows. I kind of want to do the similar trade, but opposite, doing the same thing. I think this one's been down 4% per month for the last quarter as well, literally going the opposite way of XME. I was trying to do a kind of almost a pairs credit trade, but I want to see what you think. So this one, I was going to do the March 22 puts, buy those, sell the Jan 22 puts. The thing's very oversold, so I know it's pretty close to the shirt here. It's really like 3% above it, and you could do that spread for 29 cents. Almost the exact same trade as XME.
So this is ticker ASHR, correct?
Correct.
This is not one I'm familiar with, so I had to double check there.
It's like a less liquid FXI. It's a little bit different of the constituents. I think it's a little bit more deeper on like JD and some of the K-Web constituents.
Yeah. All right, so you're bearish on this thing, right?
Yes, sir.
Okay. And forgive me, can you go through those trade details one more time? I apologize.
Oh, no problem. So I want to buy the March 22 puts, and I was going to sell the Jan 22 puts and do that trade for 29 cents.
So once again, a calendar spread.
Yeah.
Okay.
The inverse of the XME trade.
I don't hate that trade. I also don't love it. I'm not sharing my screen. I can't share my screen here, but I'm looking at the implied volatility in these options, and they're not expensive, but neither are they cheap. They're kind of in the middle. Here's my thing about buying a put. What was the strike prices you were doing again?
22 for a share.
22. All right. So you're basically making the bet, if I may, that you think this is going to get down to around 22, but maybe not much further than that. And if that's the case, I like the calendar spread. I like it if this ETF here does go down to 22 and lands in that area, which, I mean, given the trend, it seems in all likelihood that it will. And you have until January for it to happen. So you got basically a month from now. I think it could work. I don't love it. It's not my favorite trade. I mean, I'm a little bit biased, and the guys will tell you I'm a little bit biased because I've had such a hard time when I go back over all of my trades, and even in a bear market, I have such a hard time with bearish swing trades.
Same.
They just, you got to be so much more precise on your timing on a bearish swing trade. Day trading, I love getting short on a day trade, right? I think day trades are great for being short, but when you're swinging, it's like, man, all the forces are conspiring against you. Everybody wants this thing to go higher. And the whipsaws and the pullbacks are pretty brutal. I mean, just look at today, for example, right? I mean, yesterday this thing traded down to 22.73 intraday low. Looks like it closed on the low, and today it's whipsawed back 2% higher, right? And I'm not saying that means the trend is over, but when you're holding swing trades on the short side, it's so hard. And I have found that generally speaking, for me, at least with options trading, that when we're in bearish trends or where we're in a volatile tape or we're in a high VIX environment, I generally am more consistent and make more money being more of a delta neutral trader where I'm selling premium and putting on straddles and strangles and selling the occasional put. I tend to do better with that. I don't make a whole lot of money, but at least I'm making money and not getting whipsawed in all these bearish bets that just, causing me to not live that 25 delta lifestyle, right? Not sleep at night because I'm worried about adverse moves against me. So I'm a little bit biased. This is not a trade that I love, but putting on a 22 strike put calendar spread with January options, it could work. I mean, the trend is your friend here. And at least you'll know that your risk is defined. If this thing has a face ripper to the upside, the most you can lose is the premium you paid today, and you're not going to get hurt too bad.
Yeah, thank you for that. Yeah, I was telling the guys before, I run a long neutral portfolio right now. It's much to my detriment when you have IWM run from 52-week lows to highs in 6 weeks. It's been screwing me. So I'm actually going to tilt more long for the first time. So when I was constructing this trade last night, I knew just because of the bearish bias, I knew that this one may not be going well. But I wanted to kind of take a bet on XME, that bet on global growth, and then still have some little bearish bets on China. My fear is that I don't know how much into fundamentals we want to get. Obviously, China didn't stimulate, and they're not having a V-shaped recovery like every other economy that did after COVID. My fear is that the everything rally spreads to China, and then this, like you said, becomes a face ripper. Hasn't become yet, but it's weird to me that EWZ, 52-week high, SPY, Q, XLK, Dow, IWM, and yet China, when they sneeze, the whole world gets a cold, and we've kind of like brushed that off for now. And if you look at the internals of China, the industrials look terrible, real estate, financials, consumer discretionary. They have those ETFs with a little less liquidity, but China's kind of unraveling. So I just wanted to capitalize on that potential.
Yeah, Strazza and I saw that firsthand when we were in Hong Kong. We caught the wind out there that things are not the way they seem. And when you start talking fundamentals of China, I start thinking about fundamentals of cryptocurrencies. Can you really? Are they really the thing?
John, do you run multiple strategies, or you're running one book?
It's one book. I kind of have a couple of different strategies because the ETFs, single stocks, and options have a little bit different, biases. Cool. All right, can I ask one more?
Yeah,
trade?
Go for it.
Chart? Yeah, and the last one, I think you'll like this one. It's more a bullish everything rally catch. It was the ticker TAN, the solar ETF. I used to ride this one down, all the way down. This thing's had a strong bounce now. I'm a big 1 year, 50% Fibo guy. That's how I determine if you're a loser or if you're a superstar. This thing's had a strong bounce-ish off the bottom. I mean, 40 to 50, that's, a little bit more than 20%. What do you think about the option trade? How would you construct this if you want to get long?
I'm looking at this chart, and one thing that screams out at me, and I maybe should have mentioned this earlier, but every time I look at considering an options trade, there are two things that I need to know first. The first thing I need to know is what's my bias? Am I long? Am I long biased? Do I want to get long? Do I want to get short? Or am I neutral? Right? That's the obvious first step that all of us take before we put a trade on. But the second step, and this should be 1A for me, is the next thing I do is I look at the implied volatility. What is the options market pricing in? Are options expensive? And in this case, in TAN, the options market is screaming to me that options are expensive. The implied volatility is the highest it's been all year in TAN. And so for me, I'm looking at this chart. This is certainly not a chart I want to get aggressively bullish on. I could see where you can make the case that maybe the low is in and the bounce is going to continue. For me, this thing screams selling puts. If I wanted to get involved, I would sell puts here. It's not an aggressively bullish bet. But, you maybe sell let me look at the options chain. If there's a 47.5 strike, I would love that. I would. I was
looking at the Jan 45s or something. Okay.
Yeah, I wouldn't even go that far away. I would look at the February. Jan's a little too close now. I mean, we only have 29 days to expiration. Generally speaking, when I'm selling premium, I want to sell, between 4 and 6 weeks to expiration, generally speaking. And it's never a perfect world, but the January expiration is just too close. 29 days. I mean, I guess that's 4 weeks, but I want a little bit more time.
Okay.
I would probably sell in February, and I would look at selling the 47 strike, I think. And the reason why I'm thinking 47, look at that. It just happens to correspond with the 25 delta. That was not by design, but I like the 47 because if I'm looking at that chart, we had a nice little gap early last week that we opened on, what was that, the 14th? We opened at 49, basically. And so if we get back below 49, I don't want to be in that trade anymore. So maybe I would even sell the 49 strike. Because I could get 210 for it right now, which is, that's a pretty good premium. Mm-hmm. But also I should also point out, when I do sell puts, and I don't know if you're the same way, but I don't like to hold these to expiration. I'm not trying to squeeze every nickel out of it. I'll look to buy it back when I can buy it back for half of what I sold it for. So if I sell
more than half, yep.
Yeah. So if I sold it for $2 ish right now, I would look to buy it back for $1. Again, not an aggressively bullish bet. It's more of stacking the odds in my favor, taking a higher probability bet because the options market is kind of offering that up to us, right? When implied volatility is high and premiums are high, you want to be a net seller. Generally, that's an edge that plays out over time.
Absolutely. All right, I have one more if you really want to. The last one's XLU.
Yeah, quick. One more.
Yeah.
XLU. You love the ETFs, I could see.
Yeah, they're liquid. You can get in and get out. You can really, diversify your strategies.
I mean, just real quickly looking at the XLU chart, to me, without the implied volatility doesn't really support it, but it doesn't hate it either. But this to me screams delta neutral. I'd probably put on a strangle of some kind and maybe sell the 67 calls and maybe the 58 puts somewhere in that area. That definitely looks like a range bound delta neutral trade to me.
Perfect. All right, awesome. Yeah, it's low. Yeah, absolutely. All right, awesome.
Well, hey man, John, great to meet you. Next time we're in New York, which will be next month, by the way, you should come hang out with us that one of those nights when we're tooling around the town, right, JC?
Yeah, let's do it. That'd be fun. You guys can you guys can talk about all your Greeks and whatnot, and I'll go get drinks at the bar for us.
Hey, and by the way, in the comment section, I saw Rachel say, "This is the show I pitched you at the bar." Well, Rachel, shame on you for not knowing that me and Strazza do this every Monday on the Flow Show.
More or less. This is it.
On. This is what we do on the Flow Show, Rachel.
This is the Flow Show. Yeah. John Salama, thanks a lot, man.
Thanks, John.
Likewise. See you guys.
Adios.
Yeah.
All right, we got to hop. Do we have any recess? I don't even know if
hit it.
Yeah, I'm hit it. All right.
Steve Strazza, did you like that options little conversation there? That was fun. That was good.
I had to trade some options, but yeah, it was good. It's always good.
I just want to quickly talk about the that bounce back in small caps. We put on this Chewy trade to the highs of the day. Taking out yesterday's highs, so just something to keep in mind. Sort of the reaction after yesterday's selling. A lot of these things are back hard, so curious to see how they end the week.
Sean, you're always good for a good recess. What do you got?
You put me on the spot there. Sorry to ruin your lead there, but
you're always going somewhere cool. You're always doing some cool hikes or going.
Okay, all right.
Not Everest or something. I don't know.
To that point, I told the guys yesterday in our internal analyst meeting, but I'll mention here because I think this is kind of fun. One of our subscribers, All Star Charts Research, who lives in Singapore, of all places, Singapore. We have customers from all around the world. Strazza and I had a great opportunity to meet him in person when we were out there in Singapore this summer. Great guy. Well, he happens to be in the U.S. this month. He's out here for work, and he's hitting around all these different cities. He's coming out here to Colorado next week. I'm going to get to take him on a tour of the Rocky Mountain National Park, him and his wife, and I'm very excited about that. So awesome. That's the great thing about meeting our customers all around the world. We get to have fun with them and show them our corners of the world.
He brought us to a great restaurant too. Great meal. Great meal.
He did. Which reminded me, Strazza, someone, just a random Twitter thread that I came across last night. I don't remember who it was, but it was somebody that we all know. He was asking us, is the James Clear from Atomic Habits. He had a thread out there asking, what's the best restaurant you've eaten at this year? And I had to chime in, and Strazza, I don't know how you feel about it, but remember that restaurant in Hong Kong up that high rise with a beautiful view of the city? Aqua?
Yeah.
Aqua. That was the best restaurant I've eaten in all year.
It was the coolest restaurant, for sure.
Question.
Yeah, it was cool. So it had a perfect view of downtown Hong Kong.
Yeah, right. Per view of Victoria Harbor. The food was amazing. Remember the presentation? Remember that dessert that came out that was looked like a scene in a forest? Like, it was unbelievable.
The dessert was crazy. I think we had to get a double order of the uni.
Okay, stop it. Stop it. You're making me hungry. Stop it. Okay. We're done, everyone. Hey, if you want more Sean, you get more Sean today at noon for the Options Jam session. Come by for that.
Woo.
Come by after for Chart Request Live with Steve Strazza and myself at 1 o'clock today. So that'll be fun. All right. See you guys later. Go make some money. Have a good one. Have fun.
Go Cowboys this weekend. Go Cowboys.
Never go Cowboys. Come on.
Never go Cowboys.
Run it.